Hoffman here doing the TheoTRADE evening update. It's May 14th, 2025. So we got about 25 minutes to go to the cash close here on this Wednesday afternoon. The S&Ps are doing absolutely nothing. A nice calm falls over the marketplace after, whatever we actually saw on Monday, which was an explosion to the upside. You know, the irony of the move to the upside from Monday is, there were so many pundits out there. This is an unprecedented move. The truth is, on Monday, we literally did exactly what we were expected to do. Like, we hit the upper edge of the expected move. Tuesday, we actually continued a little bit more of a kind of a squeeze situation on Tuesday, which I'm going to show here momentarily. Then here we are on Wednesday, massively unchanged. I'll just tell you right off the cuff right now, I'd be surprised if we didn't actually pull back to the upper edge of the expected move in the SPX. I'm going to hit that right off the bat. The upper edge of the expected move in the SPX falls in or around 5,800, but that's 5,800 as it pertains, again, to the SPX, not the S&P futures, right? So there's a difference in pricing over here. So again, this upper edge of the expected move is right around 5,800. I mean, right now, you'd be looking at 85 point pullback inside of the S&Ps because we are substantially outside the expected move, and the happy place for risk, and this just goes with probability, right? The happy place for risk is right at around 5,800 inside of the SPX. So that is possibly on the docket for the remainder of the week. Other than that, as I was saying, so you get this rip and move to the upside, obviously trade related. A little more follow through in yesterday's trade. Yesterday, being Tuesday, that was actually squeeze related. I actually saw a multitude of underlyings literally squeezing to the upside. It's often what we term a gamma squeeze. Tesla, okay, but to a larger extent. Meta yesterday. Meta actually seeing quite the squeeze to the upside, and of course Nvidia. Nvidia in yesterday's trade squeezing to the upside. And I start talking about squeezing. This is retail trade. Very often a retail trade, they're buying calls, okay? And buying calls forces the market maker to turn around and sell you the calls, then buy stock. And it actually, this cyclical kind of move where you get actually caught in like a feedback loop. I say it's a cyclical move. It's just a feedback loop that causes shares to actually trade higher. And we saw that the marketplace yesterday, even though the market was higher yesterday, it was being driven basically by like 3 or 4 different products. You can throw Microsoft, hat in the ring on that one too. Microsoft is also kind of in a squeeze situation, which actually brings up one thing I'd be looking for. As I said a moment ago, the S&Ps very well may pull back a little bit, but in the near term, you also have to look at stuff like Microsoft. You have to recognize, and I'll even pull up like a 3-year in here. We're facing at or near all-time highs, and because of that, Microsoft very well will be caught in another just kind of little pop to the upside squeeze situation. Doesn't matter, what the technicals say in terms of like, oh, it's so overbought. See, overbought, I mean, look, it's outside the expected move. Things are getting crazy. But once you actually get retail that grips a hold of this and this thing starts to cross through, 455, even 460, ultimately you'll get call buying in here that'll continue to propagate gains to the upside. So the reason I'm bringing up Microsoft in a marketplace that's relatively slow today, I think that's actually, kind of a short-term opportunity. I'll show you another one for those of you, if you're bullish in the marketplace. I took a position today in Google. I actually took a bullish position in Google today, and I did this using the catapult strategy, where I need Google basically up here, and I have like 3 months for that to happen, but I need Google over 190 anytime in the next 3 months. If the marketplace is going to continue to perpetuate gains, though, I think there's a pretty good probability of that happening. So the catapult strategy is I bought a call spread inside of Google and I financed it by selling S&P options and futures. And it was beautiful. So I think Google is well situated for a move to the upside, okay, if the S&Ps continue higher. I mean, you look around like, but Microsoft, as I said, Microsoft's already fully priced, things near all-time highs. Okay, look around stuff like Amazon. Okay, Amazon blistering move back to the upside on trade. Okay, look around at Meta. Okay, Meta's not necessarily near an all-time high, but this thing has had an incredible move. I mean, you got to look at like Nvidia. Nvidia is over 50% gain from its recent lows. 50%. Okay, so the monsters of tech, okay, they're fully priced. A bunch of them are fully priced, not Google. And I know the reasons behind Google. You know, Google's losing search, Google's doing this, Google's doing that. Yeah, but the bottom line is, if the rest of the marketplace continues to kind of propagate gains, you know, these things are going to pop to the upside. On the flip side of that, though, I look at stuff like Netflix. Netflix, I think, is actually well situated for a short position. Maybe, just maybe, I'll wait for this one to roll over a little bit more. But here's one where, you know, they even announced specifically today, like the number of subscribers, but it didn't really have much of a positive impact to the shares throughout the course of the day. So Netflix could actually be on the short side. Look, even a marketplace that's, you know, massively unchanged today, there's a ton of opportunities that continue to kind of present themselves. I mean, today, as I said, it's kind of a, you know, like an eerie calm almost falls over the marketplace, pausing. It's waiting for more exogenous information. And that's what this marketplace has basically become. And I keep talking about this week in and week out. The marketplace continues to be, okay, just this, you know, this fuel that's just waiting for the next tweet to come out, and then we trade 200 points higher or 200 points lower. And I've been catching a lot of those moves, but I've been catching with this catapult strategy where, you know, buying out of the money call spreads or out of the money put spreads. I caught the down move, big down move. I caught it in Wells Fargo. We made money in Wells Fargo. We made money in the XLF, really caught the down move with some of the financials. And then we turned around and actually caught the up move, specifically with stocks like AMD, Jets. There's a couple of different trades I had on, you know, catching some of the up move, and I continue to actually have trades on specifically like in bullish, like right now in Nike. Okay, I even looked into a Lululemon trade. I can't believe I'm saying that, but I was looking into a bullish trade inside of Lululemon, but instead I actually put on the bullish position in Nike, which is it's got some legs under it right now, seeing a little bit of a bid back. Nevertheless, okay, in a marketplace like this, as I was saying, and I'm going to bring up Nike for a second because kind of an interesting trade. Nike, again, jumping on some of the gains, fading back, but very mildly. So we're in a good position though on these. Okay, I was saying though, taking shots right now is where it's at, because the marketplace, it feels just sketchy. It feels like destabilized, and you don't know what, you know, one day is going to bring, the next day is going to bring. Okay, you got to be concerned about, you know, yes, there's lots of positive information out there. Okay, but the on the flip side of that, it's not going to take much for like China to turn around and be like, we have a little bit of an issue over here with one of the deal points, and this S&P to actually sell off another 300 handles. Okay, trade both sides of it. Use catapult. Okay, take some shots out there because it is a really sketchy market. Okay, a couple last things over here. Number one, the volume inside of the S&Ps today is non-existent. Doing 975,000 contracts, seriously? Okay, I mean, it's crazy. It's crazy light. So the volume is just non-existent, which is to be expected. Come on, the marketplace is flat. Okay, it's I guess sell in May and go away is not exactly the playbook over here, but as we actually, you know, turn the corner into mid-May, the gains have been absolutely stellar right now. Obviously, for the month of May, from April into May, pretty wild differentiation in this marketplace. Okay, but again, you're starting to see a little bit of a bid back to volatility. So everybody's like just kind of on edge right now in the marketplace. Last but definitely not least, back to the SPX. So in the SPX, as I often do, is I was kind of bringing up the expected move already. So we're well outside the expected move, and the expected move this week was basically 130 points. So you're looking for this 130 point move higher, 130 point move lower. Like, look, we had a 130 point move from the second that the marketplace basically opened on Monday. So where are we right now? Okay, we are 100. Okay, and 80 some odd points, out. I mean, it's a wild move, on the week. And I'm looking for, again, a pullback, and that pullback would be, 80 points or so, 80 handles, and just kind of reverberate on the upper edge of the expected move. Okay, that is what I would actually look for, again, to the remainder of the week. I think it's actually pretty good, probability of that occurrence. Now, according to expected move for the remainder of the week, okay, what do you have? I mean, ironically, it's about $68, $70 expected move. So we're not far off. And again, what I wanted to do is just show you on the chart, okay, where we are. Okay, where are we on the chart? Well, 58.82. Where's the upper edge of the expected move? Basically 5,800. So as I said, you're like 80 handles away. And the irony is that the expected move to the remainder of the week about a $70 expected move. So the two kind of jive with one another, and that's something. Look, it doesn't mean just because we're looking at the upper edge of the expected move doesn't mean we have to pull back to it. But again, as I said, I think there's a pretty good probability in this marketplace, and I'm always going to trade with the probabilities. So I also have a trade sitting literally, okay, waiting for that to occur. I've got a butterfly sitting on the upper edge, again, the upper edge of this expected move, waiting for the SPX to ultimately pull back into it. And we'll see, if it hits, winner, winner, chicken dinner. Other than that, again, a lot of opportunities. As I said, the S&Ps have kind of paused today. Some light volume, some slop-tastic trade, a few squeezes going on in a couple of the tech stocks. Other than that, got a marketplace just waiting for the next tweet. Thanks everybody for joining us here at TheoTRADE. Have a wonderful evening. Bye-bye.